Hello and welcome, my friends. In today's episode, we're going to have a look at a subject I'm really passionate about, and that it's around numbers mastery. So we're going to look at improving your education around numbers mastery, which is so important, right? Absolutely one of the rules of the game for success in business. In fact, we absolutely know, and I'm sure you know, that successful business owners know their numbers. Yeah. So this is about helping you know your numbers. In this episode, I'm going to dive into the bank account versus the profit and loss. So it's the bank account versus the real financial reports or numbers or metrics, okay? We're going to talk about whether you're looking at the bank account to judge how your business is performing, because if you are, you're in really good company. But we know that 80% of small businesses fail within their first 5 years, okay? And we don't want you to be in that good company. So today, once again, is about improving your numbers mastery. It's going to be a quick episode to give you lots of impact, lots of education, all right, to teach you what you need to know in order to do better in business. So I would just so love for you to listen to this episode so I can really help you to head in the right direction when it comes to how you know and use your numbers to do better in business. For more information on this episode or how to work with me, check out the show notes or visit betterinbusiness.global. You've tuned into Better in Business with Jeannie. As an award-winning strategic bookkeeper and business veteran, I am dedicated to helping entrepreneurs learn, grow and prosper. This podcast aims to challenge your thinking. If you're not thinking the right way, how can you act the right way? Each episode will dive into key drivers of success, which I also call the rules of the game. Learn the rules, play to win. Let's go. I like to start every episode by reminding you that it is globally recognized that pillar one for the success of any business is up-to-date, accurate bookkeeping. If your books are not right up to date, tune into episode 1, please. You can also get in touch with me if you'd like some help. Okay, so today's episode, are you running your business on the bank account? It's a really key question and like an important phrase. In the intro, I talked about what that means. Okay, so I'm going to rinse and repeat just quickly. It's so important. So if I'm imagining you as a business owner, if you are kind of nodding your head right now and saying, well, yeah, I look at the bank account and I see it as an indication of how the business is doing, how the business is performing, then the answer to that question is yes, I am a business owner who is running my business on the bank account. Okay, so let's just kind of leave it there and we'll keep going. So next, I really want to point everyone towards the resource that I created, the small ebook that I created, and the podcast that goes with it. And that is called the 7 Deadly Cash Flow Sins. So we'll drop links in the show notes. Basically, if you go to betterinbusiness.global, you'll see it there. It's a really quick read and it's a how-to guide. So it's a how-to really avoid the 7 Deadly Cash Flow Sins. And in there, I talk about running your business on the bank account. So the Better in Business podcast is about teaching you the rules of the game, right? And it's also about challenging your thinking. And I like to say challenging what you think you know, yeah? Because sometimes, myself included, I can be stubborn from time to time, especially in my personal life. Sometimes we think we have a knowledge, we think we know something, then we find out that it's incorrect. We're thinking the wrong way, yeah? So we need to think the right way in order to act the right way. So from inception, for me, this podcast has been about teaching you the rules of the game so that you can think the right way, so that you can act the right way, okay? And if you believe that your bank balance gives you an indication of how your business is performing, this episode is about redirecting you from that belief, which is incorrect, to the correct information, okay? rinse and repeat for a minute on business failure rate. So hopefully you can see the link between up to 80% of business owners are running their business on the bank account. Up to 80% of business owners are failing in their first 5 years of business. Okay, so to help you understand why you shouldn't run your business on the bank account, and you should run your business on a beautiful, simple set of financial reports that come out of your bookkeeping and accounting software, which I recommend you have someone actually sit down and help you with, cue a strategic bookkeeper. But basically, the key message here is that your financial reports tell you how your business is performing in terms of profit and cash, not your bank account. And to explain that a little bit more, I'm going to tell you a story and then also just break up the detail, or maybe I'll do them in reverse. So the detail around that is that the money that sits in your bank account, it doesn't take into account lots of different things. So for example, so let's say you're just a GST registered service-based business, and you've got some staff. The money that flows into your bank account generally is from the income producing activities, okay? So from that, you've got a whole lot of obligations that are going to become due at some point in the future, right? Which is the primary reason your bank balance, which is constantly changing, is no indication of your business's performance. Because a business's performance is profit and cash, and beyond that, it's prosperity. Okay, so because I hope we don't just work to work, I hope we work to live. So just quickly before we tell the story, which I think will make it a lot more meaningful, so those obligations are short-term, medium-term and long-term. So what would short-term obligations be? Well, that would be to pay your staff, and to pay your bills, so just little short-term things. So a little bit longer term will be when your superannuation becomes due, when you've got to pay your GST bill, when you've got to pay out the 𝒃𝒔𝒊𝒏𝒆𝒔 withholding tax from your payroll, when you've got to pay your income tax bill, when you've got to declare and pay your own superannuation. So that is a few of the things. What about when you've got to make loan repayments, right? So this is where we see business owners get into trouble, is there's all these short, medium and long-term obligations that are not front of mind. Of course they're not front of mind, okay? So here is what happens to business owners from time to time, or a lot of the time, unfortunately, because they are running their business on the bank accounts. I'm going to give you like the journey that happens. So they start out in business, and of course they're thinking, I should just focus on revenue, right? So and that's important. They go out, they get the leads, they turn those leads into sales, and they're billing their customers. Maybe they're even collecting the money from their customers. That one's great. And the money starts to drop into the bank account, and they can use that money to live on, right? Business is that simple, right? No, unfortunately not. So we've got that part of the journey happens, and the money's dropping into the bank, and they're living on the money, and that's great. So time starts to pass, and they have promised themselves that they'll get that bookkeeping stuff up to date, because they're scratching their head and thinking, I've got a bit of a gut feel. Remember, we actually have brain cells in our gut. I've got a gut feel that leaving that bookkeeping is not such a good idea. And over time, actually, they often begin to develop a gut feel that there are some things lurking beneath the surface that are wrong. And it's a little bit like I talk about the health of a business. So it's this feeling that there's something wrong, that there's something unhealthy, right? And sometimes they start to get indicators, a bit like when physically we're sick as well. Like we might not know everything, but we might get a headache, or we might get a pain in our tummy, right? A bit of the same starts to happen to this business. So what will happen is it'll be like suddenly the accountant mentions something, or they realize, oh, we haven't lodged our GST returns, that's something we have to do. And then they go about their first one, and then they don't have the money to pay that. And then they're like, hang on a sec, how did that catch us off guard? We have money in the bank. We've been trading and living, I've been making sales, money's been coming in, I've been able to put food on the table, I've been able to live a reasonable life. I don't have that money to pay that bill. And okay, well, I'll just work some more and I'll get some more income, and then I'll be able to pay that off. I'll set up a payment plan. And then something else like that happens, yeah? And then when I intervene, unfortunately, sometimes what happens is I might have up to 2 years of bookkeeping to get up to date. So we're actually catch-up and rectification specialists, so we get that done pretty fast. I have a special methodology for that. But we do that, and very quickly we're able to see that a business owner might have $100,000 or more in forward obligations that they just did not realise they were going to have. And it might be a mix of GST, PAYG, other tax items, and so on. And then to add insult to injury, what can happen is I might look at the trading history of that business, like the income trends and the gross profit trends and the net profit trends, and quickly calculate that it would take far too long for this business to ever be able to trade out of the kind of debt that they're in. So then they have this massive debt that they have to do something with, right? So they've either got to get a loan to pay it down, or they are going to face some kind of insolvency or bankruptcy. Now, luckily, I have this amazing supplier, I'll call them, business buddy, who I'm happy to name on this podcast, and that is 𝐸𝐳𝐴. I've actually done a podcast with one of the owners, Hank. So Hank and Ashley, their cards are always in my pocket because they're like the cushion that my clients can land on in these circumstances. And if you are listening to this and you feel like you might be suffering a bit of debt and distress, a conversation with Hank or Ashley costs nothing, or someone on their team, but avoiding the reality of a situation like this can cost you dearly. So that's a total segue, because this episode is not a plug for Ashley and Hank, except to say that, look, like a lot of bookkeepers Australia-wide are really happy to have them as a resource to be able to refer to, because they can really help us when clients get into debt and distress. So you know what? I'll drop their details in the show notes. Anyway, if you do sing out to them, just say, Jeannie sent me. But I digress a little bit, because now what I want to talk to you about is how to avoid that happening. So, and also what to do if you think that you're in that situation. So let's start with that. So if you have been running the business on the bank account and you think, now is the time to stop that, right? So what I would recommend you do is have a conversation with us. Like, sure, read the 7 Deadly Cash Flow Sins, and listen to podcasts and all that jazz. But I really believe the simplest and the easiest action you can take is a quick conversation with me, okay? So just connect with me via betterinbusiness.global, and I will set up a time for you and I to talk, and we can just, chew the fat, and I can give you insights, okay? It's obligation free. If we vibe, we'll work together, yeah? I don't mind if we talk for 15 minutes and you don't work with me either, but I really want to encourage you to at least talk to me if you feel like, goodness, that's me. And it may be, okay, that's me, but I don't think I'm in a lot of trouble because I'm smashing it, but I've probably got obligations that I haven't thought about. Or, you know what, I think I might be in deep. Then feel the fear and call Jeannie. Courage and fear exist together and not separately, okay? And even if that phone call was just me directing you to 𝐸𝐳𝐴, well, then it's going to be a great step in that direction, okay? So if you're feeling that way, then please contact me. So now let's talk about how to avoid that. So how to avoid running your business on the bank account in the first place is to have up-to-date, accurate accounting records, and then to be able to understand how to look at the profit and loss and take into account things that aren't on the profit and loss. Okay, and we won't go into that too much because guess what? You do not have to be a bookkeeper or an accountant to be a successful entrepreneur. Yeah, but sometimes you have to hire one. And guess what? It doesn't cost you a fortune. And if you engage around strategic bookkeeping, you'll make more than you spend anyway. But I've done another podcast on that anyway. So yeah, you absolutely need to look at your net profit, take a bottom-up approach. So your net profit is the final line on your profit and loss, and it's the profit in the business before tax and drawings. But the other piece of the puzzle is your owner drawings, because they do not appear on the profit and loss. But like I said, don't get weighed down in this stuff because it probably is day one of a 365-day journey. Okay, so again, you can always reach out and say to me, Jeannie, all of that was confusing. Can you just help me or explain it to me? Okay, and we can absolutely talk to you about that. But to avoid having this happen, absolutely step one is up-to-date, accurate accounting records. Step two is using them. Step three is making sure that your cash flow is as positive as possible, and the 7 Deadly Cash Flow Sins book is a really great how-to guide for that direction. All right, so I won't go into that because you've got that resource, but if we just review those few steps. So number one, up-to-date, accurate accounting records, so up-to-date all the time, weekly. Number two, rather than look at your bank balance, you want to be looking at the net profit on your profit and loss, minus things like, then you're going to be looking at your drawings to make sure you haven't exceeded drawing out of the business more than your net profit, and there's other things at play there as well, okay? So your profit and loss is a really important part of that. And number three, you're going to make sure cash flow is good, because otherwise, if there's a gap in your cash flow, like if you're paying money out before money comes in, who's going to fund it? You have to fund it. All right, and so a profitable business can actually go broke because of a lack of cash flow, and all this begins to get quite complicated. But it actually speaks to one of the reasons I'm just such a passionate advocate for you sitting down with a strategic bookkeeper monthly in order to get a handle on all this stuff, because it is your responsibility as a business owner to become across this stuff enough. Enough. And to surround yourself with team that can support you. And that can be just a great bookkeeper and a great strategic bookkeeper that just helps you that tiny little bit that makes a massive, 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 massive difference, right? Like we've got clients who say their books only take us, a short period a month, and then we might be diving into the numbers with them. We don't have to do a lot to have a lot of an impact. I definitely want to drive home the message that you don't have to be an amazing bookkeeper or an accountant to get this stuff in order, but you do have to take responsibility, and that you don't need to spend a long time on this stuff. This is about working smarter rather than harder. So to wrap this episode up, I feel like we've talked a bit around action and key takeaways, but let's just rinse and repeat. So I hope that the key takeaway here for you is if you have been running your business on the bank account, that you understand that it is not the thing to do, okay, and that you need to make a change, that you will allow me to redirect you, okay? So this is what this is about, the key takeaway. Your business performance gleaned from a set of financials from up-to-date, accurate accounting records, not from your bank account. And if you continue to run your business on the bank account, you are setting yourself up for some pain. And so action. I'm sure you can figure out the action here. If your books aren't up to date, you need to get them up to date. A conversation with us would be a great start, okay? If you have been finishing work each day and thinking, I promised myself I would get the books up to date and I haven't, and I really don't want to do it because I'm tired and it's the end of the day. Well, of course you're tired and you don't want to do it. That's normal. I don't recommend that business owners do it themselves. I don't see it work very well for them, okay? And then the last action is just to consider the value of a strategic bookkeeper. I've done a podcast on this so that you can self-assess that for yourself. Thanks for tuning in. For more information on this episode or how to work with me, check out the show notes. If you'd like to know how I can help you do better in business, you know where to find me, betterinbusiness.global. See you in the next episode.